Before the Medici ever wore crowns, they built something more powerful than a kingdom, a bank. A bank so important that kings, popes, merchants, and entire cities could not function without it. Picture a small, cramped room above a Florentine wool shop. The year is 1397. A middle-aged man sits quietly, counting coins by candlelight. He records every transaction in a leather ledger with obsessive precision. He has no army, he has no crown, he holds no political title of any kind. And yet, within 3 generations, his family will control the finances of popes. They will crown 4 kings of France, produce 2 queens, fund Michelangelo, fund Botticelli, and quietly decide which wars could be fought, and which wars simply could not. Because the money to fight them did not exist without his family's permission. His name was Giovanni de Bicci de Medici, and what he built was not just a bank, it was a blueprint for how private financial power could quietly outmaneuver kings, popes, and armies. It was so effective that modern banking still carries its DNA. Modern accounting carries its DNA. Even the modern relationship between money and political power traces back to this family. Welcome to Economy Rewind History. This is the rise, the reign, and the quiet, permanent influence of the Medici banking empire. To understand why the Medici became so extraordinarily powerful, you first have to understand medieval Europe's financial chaos. In the centuries before the Medici rose, moving large sums of money across Europe was dangerous and wildly inefficient. Merchants and clergy traveling with actual gold and silver coins were constant targets for bandits. There was no reliable, standardized system for settling debts between distant cities or kingdoms, or even the Catholic Church itself. And the Church collected enormous sums of money from congregations across the continent. Into this chaos stepped a handful of Italian banking families, but none succeeded more powerfully than the Medici. They understood the real problem. Whoever could move money safely across long distances would hold a structural advantage over European commerce, over politics, and over religion. Giovanni de Bicci de Medici founded the Medici Bank in 1397. He built it on financial experience gained from a relative's banking operation in Rome. There, he came close to the most valuable financial client in the Western world, the Vatican itself. Giovanni understood something that would define Medici's strategy for the next century. Proximity to the Catholic Church was not just spiritually significant, it was financially priceless. It was the single most valuable banking relationship available anywhere in Europe. The papacy collected enormous sums of money from across the continent, tithes, fees, donations, and payments for religious offices. All of that money needed to be safely transported, converted between different currencies, and made available in the cities where the Pope and his officials actually needed it. Giovanni positioned the Medici Bank to become the Vatican's primary financial handler. That relationship generated enormous, steady profits for generations. But it gave the Medici something even more valuable than money: direct, trusted access to the most powerful religious and political institution in the Western world. The actual mechanism behind this power was a financial innovation that feels shockingly modern. The letter of credit, combined with a network of Medici branches across major European cities: Rome, Venice, Milan, London, Bruges, and Geneva. Instead of transporting heavy sacks of gold and silver across dangerous roads, clients could use paper. A merchant or clergyman could deposit money at one Medici branch, then receive a letter. That letter could be redeemed for equivalent value at another Medici branch across Europe. It was essentially an early form of a banking check, or a wire transfer. This single innovation solved the physical danger problem of medieval finance, almost entirely. It also allowed the Medici to profit handsomely from currency exchange. Different cities and kingdoms used different coinage systems. Their values fluctuated constantly, and the Medici sat at the center of the entire network. They could quietly profit from the exchange rate on nearly every transaction, every payment, every transfer, every movement of money through their hands. This was, in the most literal sense, the birth of international banking, a coordinated multi-city financial network, centuries before anything resembling a modern bank existed anywhere else in the world. The Medici also pioneered, or at minimum dramatically refined, a system of accounting still used today. It was called double-entry bookkeeping, and it remains the literal foundation of how modern businesses track their finances. Under this system, every transaction was recorded twice, once as a debit and once as a credit. This created a self-checking mechanism, one that made it much harder to hide fraud, harder to make accounting errors, and harder to lose track of where money had actually gone. This might sound like a small, boring technical detail, but its importance is difficult to overstate. Double-entry bookkeeping gave the Medici something most competitors did not have: a genuinely accurate understanding of their own empire. They could see exactly how profitable each branch actually was. Almost in real time, that allowed them to make faster, more confident decisions: where to expand, where to pull back, and which risks were actually worth taking. Every publicly traded company on Earth today still uses this basic logic. Every small business tracking finances and accounting software uses it too. They are still using a system the Medici helped popularize and refine more than 500 years ago. But the true genius of the Medici family went far beyond accounting. It was their understanding that money and political power were never truly separate. They were simply two expressions of the same underlying resource. The Medici did not remain private financiers forever. They did not stay content quietly collecting profits from behind the scenes. Instead, they deliberately converted financial power into political control, patiently, strategically, and almost invisibly. Their target was Florence itself. Cosimo de Medici, Giovanni's son, became the master of this strategy. He took over leadership of the family bank in 1429, but he did not seize power through force. He did not act like a conquering warlord. Instead, Cosimo achieved control over the Florentine Republic through financial leverage, strategic loans, carefully placed political allies, and an extraordinary talent for appearing unofficial. Technically, he remained a private citizen. Functionally, he ran the entire city from behind the scenes. He funded public building projects. He supported artists. He supported scholars. And he extended strategic loans to political allies and rivals alike. This created a dense web of financial obligation across Florentine society. Many of the city's most powerful families owed the Medici Bank money, or favors, or both. This is essential to understanding how the Medici operated. They rarely needed to threaten anyone directly. Financial dependency itself became the mechanism of control. Cosimo was briefly exiled from Florence in 1433. Rival political factions correctly recognized the danger of his growing influence. They understood that his financial power threatened their own political power. But this is where the strength of the Medici banking network revealed itself. Within a year of Cosimo's exile, the Florentine economy began to suffer. So much commerce depended on the Medici Bank. So much credit depended on it. And so much financial trust depended on its continued operation. Cosimo's political rivals discovered something shocking. They could remove the man, but they could not remove the financial infrastructure. His family had built that infrastructure into the foundation of Florentine economic life. Cosimo was invited back to Florence in 1434, and from that moment forward, the Medici grip on the city became almost unchallengeable, not because they held an official royal title, but because they had made themselves financially indispensable to the entire functioning of the city itself. The scale of Medici influence eventually extended far beyond Florence. It reached directly into the highest levels of the Catholic Church. Across multiple generations, the Medici family produced 4 popes, including Pope Leo X and Pope Clement VII. This placed Medici family members at the absolute pinnacle of religious authority and political authority across the entire Christian world. Through strategic marriages, the family extended its influence even further. Marriage was not treated as romance. It was treated as strategy, a tool wielded with the same precision they applied to banking itself. Medici daughters became queens of France, most famously Catherine de' Medici. She married the future King Henry II of France, and would go on to wield enormous political influence over French royal politics for decades. Later came Marie de' Medici. She became queen consort of France, and served as regent, ruling the kingdom directly during her son's childhood. Think about the sheer scale of what this represents. A single Florentine banking family began as wool merchants and money changers, operating out of a modest shop. Yet eventually, that same family placed its own bloodline onto royal thrones and into religious leadership inside the most powerful kingdoms and institutions in the Western world. And it achieved this almost entirely through financial strategy, not military conquest. This is where the Medici story becomes genuinely important, not just as family history, but as a case study in the economics of power itself. The Medici demonstrated something centuries before modern economists formalized it. Controlling the flow of capital could be just as powerful as controlling territory, and in many ways, considerably more durable. Armies could be defeated, kingdoms could be conquered, and kingdoms could be lost. But a banking network embedded deeply into regional economic infrastructure was different. Removing it could collapse commerce itself. That made it an almost unbreakable form of leverage. The Medici understood the deeper truth. Whoever controls how money moves holds hidden power. Whoever controls how debts are settled holds power. Whoever controls how large projects are financed holds power. This kind of power operates quietly, continuously, beneath the visible surface of political titles and royal bloodlines. That insight remains extraordinarily relevant today. Financial infrastructure is itself a form of durable political power. Modern central banks show this. Sovereign wealth funds show this, and major global financial institutions show this. They quietly shape geopolitics today, often with far less public attention than armies, elections, or diplomatic crises receive. The Medici also understood another principle that still shapes modern wealth management: the strategic value of culture, art, and public image. These could legitimize raw financial power. and cemented emotionally in the public imagination. Beginning with Cosimo, the family poured extraordinary sums into culture. That patronage reached its most famous peak under his grandson, Lorenzo de Medici, known to history as Lorenzo the Magnificent. Under Lorenzo, the Medici funded some of the greatest artistic achievements of the Renaissance. They funded Sandro Botticelli. His paintings, including The Birth of Venus, were created under direct Medici patronage. They also supported a young Michelangelo. For a period of his early career, Michelangelo lived within the Medici household itself. He received mentorship, financial support, and access to elite cultural circles during his formative years. This was not simply generous philanthropy for its own sake. Though genuine appreciation for art and scholarship was certainly part of it, it was also strategy, a deliberate way to transform raw financial power into something more beautiful. Money alone can appear cold, exploitative, or threatening, but art changes how power is perceived. Through culture, the Medici made their dominance look enlightened, benevolent, and civic-minded. They cemented the family name into the cultural identity of Florence itself. Their power became part of the city's pride. To ordinary Florentines, Medici dominance could feel less like financial control and more like inspired civic stewardship. Like every financial empire built on debt, leverage, and extended credit, the Medici Bank was never invulnerable, and its eventual decline offers just as many important lessons as its rise. A significant portion of the bank's later troubles came from a familiar risk, a risk that still threatens financial institutions today, extending large loans to politically powerful clients who eventually fail to repay them. King Edward IV of England borrowed enormous sums from the Medici's London branch. He used that money to fund military campaigns during the Wars of the Roses, but repayment became difficult, and later the English branch was drawn into political turmoil connected to the English crown's own instability. The Medici Bank suffered devastating losses. Multiple branches across Europe began to weaken. Some were damaged by mismanagement, some by risky lending to political figures, and some by less disciplined leadership in later generations. Leadership that lacked the caution and discipline of Giovanni and Cosimo. Throughout the late 15th century, branches gradually collapsed one after another. By 1494, the Medici family was temporarily expelled from Florence. This happened during a period of political and religious upheaval. It was led by the fiery reformist preacher Girolamo Savonarola. By then, the original Medici Bank had effectively ceased to exist, at least as a functioning financial institution. It had survived for almost exactly 1 century. But here is the crucial detail, and it echoes almost precisely the Rockefeller story from an earlier video. The collapse of the Medici Bank did not mean the collapse of Medici power itself. By that point, the family's influence had already spread far beyond banking. It had spread into political control of Florence, marriage alliances with European royalty, and deep permanent entanglement with the Catholic Church. So even after the original financial institution failed, the family continued to rule. The Medici ruled Florence directly for centuries afterward. Eventually, they became hereditary Grand Dukes of Tuscany, a title the family held continuously until 1737. This is an extraordinarily important pattern across the history of powerful dynasties. The specific business that originally creates wealth can collapse entirely. The institution that generated the influence can disappear, but the deeper power purchased along the way can survive. Political power, social power, institutional power, and dynastic legitimacy, those forces can continue compounding for generations, completely independent of the original source of income that made them possible. So what does Medici influence actually look like in the modern world? More than 500 years after Giovanni counted his first coins above a Florentine wool shop. Every time a bank processes an international wire transfer, you are seeing their legacy. You no longer need to physically transport cash across borders. Money moves through trusted financial networks. That is a direct conceptual descendant of the letter of credit system, a system the Medici helped pioneer and popularize across Europe. Every business today that uses double-entry bookkeeping is also touching their legacy. Every corporation, every government, every organized financial institution on the planet, all of them rely on the same basic accounting logic, a method the Medici helped establish as the European standard. The concept of a private banking dynasty influencing government policy also follows their playbook: strategic loans, patronage, financial leverage, influence without formal political office. That pattern still exists today among major banking families, powerful financial institutions, and private wealth networks with political influence. The Medici essentially wrote that playbook centuries before anyone had a modern name for it. Even modern cultural philanthropy carries a Medici echo. Extremely wealthy individuals and families fund museums, universities, public buildings, and the arts, partly out of genuine passion, and partly as a deliberate strategy for lasting public legitimacy. That pattern echoes directly back to Lorenzo the Magnificent and his patronage of Renaissance Florence. There are genuine practical lessons buried inside the Medici story. Lessons about money, power, and strategy. Lessons that remain relevant far beyond medieval Italy. The first lesson is that controlling essential infrastructure creates durable power. In the Medici case, that infrastructure was the movement of money itself. They controlled the physical and logistical mechanism by which money safely moved across an entire continent. That created far more power than simply accumulating wealth. Because infrastructure creates ongoing dependency. Wealth alone can be spent, lost, or stolen. But dependency can last for generations. The second lesson is that financial leverage can create political influence. Extending credit and loans to powerful people can quietly reshape decisions. Kings, popes, merchants, and institutions all could be influenced through debt. This kind of power operates more quietly than direct confrontation, and often more effectively than force. But the same strategy carries real danger. The Medici eventually discovered this through their London branch's losses. When powerful borrowers default, leverage turns into vulnerability. And when political circumstances shift unexpectedly, even the strongest bank can bleed. The third lesson is that cultural legitimacy changes how power is perceived. Patronage of art can soften the image of raw financial power. So can education, civic projects, public buildings, and scholarship. These tools can transform resentment into admiration. What might otherwise be seen as exploitation can begin to look generous, enlightened, and civic-minded. The fourth lesson may be the most durable one of all. Dynastic power is strongest when built across multiple interconnected institutions: banking, religion, marriage alliances, political office, and culture. When power is spread across several pillars, it becomes far more resilient. Power concentrated in one source can collapse quickly, but power spread across institutions can survive shocks. The Medici proved this when their original bank ultimately collapsed. The failure of one pillar did not bring down the entire structure, because the family had spent generations building something larger than a business. They had built a system. Of course, an honest telling of the Medici story cannot ignore its darker dimensions. Their rise was never purely a story of innovative banking or generous artistic patronage. Their political dominance over Florence was rarely achieved through open military violence. But it was still built on coercion, financial coercion, strategic bribery, and calculated pressure against political rivals. They often eliminated opposition economically rather than openly by force. This allowed them to hollow out Florence's democratic institutions, while carefully preserving the appearance of republican governance. On the surface, Florence still looked like a republic. Behind the scenes, Medici influence shaped the system. Their close relationship with the Vatican also brought darker consequences. It was extraordinarily profitable, but it entangled the family in the church's financial controversies, including practices like the sale of indulgences. Historians widely recognize those controversies as a major source of religious anger and institutional corruption. Corruption that would eventually help spark the Protestant Reformation. The Medici family was also connected to political violence and assassination plots. Across their long and turbulent history in Florentine politics, the most infamous example came in 1478, the Pazzi conspiracy, an assassination attempt against Lorenzo de Medici and his brother Giuliano. It happened during Easter Mass, inside Florence Cathedral itself. The attack succeeded in killing Giuliano, but Lorenzo survived, and afterward he ordered brutal retribution. Sweeping punishment fell on the conspirators, their extended families, and their allies. The Medici legacy exists in a deeply uncomfortable space, much like the Rockefeller legacy centuries later. On one side, remarkable innovation. On the other, ruthless consolidation of power, sometimes even violent consolidation. These two forces were never truly separate. They were intertwined throughout the entire history of the family. The same system that funded Renaissance beauty also crushed political resistance. The same money that built art also bought influence. And the same family that helped shape modern finance also showed how dangerous private financial power can become. So why does a Florentine banking dynasty from more than 500 years ago still matter today? Especially to anyone trying to understand how money and power actually function. Because the Medici were among the first to demonstrate something enormous. Private financial infrastructure could rival the power of kings, and in many practical ways, it could exceed formal political institutions. They proved this on a truly continental scale. That lesson did not disappear with medieval Florence. Modern central banks still understand it. Multinational financial institutions still use it. And enormously wealthy private banking families still apply it in updated form. Across the global economy today, every time a modern international bank facilitates a cross-border transaction, the Medici echo is there. Every time an extremely wealthy family uses philanthropy to build cultural legitimacy, the same pattern returns. Every time private capital quietly shapes political outcomes without appearing on a ballot, the old playbook is still alive. Whether they realize it or not, They are following a system first perfected centuries ago, in a small counting room above a Florentine wool shop, more than 600 years ago. And perhaps that is the most enduring lesson buried inside this story, the most quietly unsettling one. The Medici never needed a crown to rule Florence. They never needed an army to conquer Europe's most powerful royal houses. They simply needed to become indispensable, deeply embedded, permanently embedded. Inside the financial infrastructure that an entire civilization depended on, they became so important that removing them became functionally impossible, not without damaging the very systems ordinary people relied on, the systems that kept daily economic life moving. That is not merely a medieval story, it is still part of the modern world, in a very real and continuing sense. The same quiet architecture of power still operates beneath the global economy today, largely unnoticed, precisely because it has learned how to remain invisible, generation after generation, family after family, institution after institution. The names change, the tools change, the buildings change, but the deeper structure remains. Control the ledger, control the credit, control the movement of money, and you control far more than most people ever realize. If this story changed the way you think about banking, power, and the hidden architecture connecting money to political control, subscribe to Economy Rewind History. Because the empires that last the longest are rarely the ones built with swords. They are the ones built with ledgers,